Good morning, everyone. Good morning, good morning, good morning. Hopefully everyone is doing okay. Good morning. All right, so we definitely have a lot to talk about for sure. So we got, we got to talk about the pullback that we're experiencing in the market right now. So yesterday we closed the day on a high note, I would say, and right now it seems like we are, we gave a lot of that back. So I have two screens in front of me. Whether you're watching me on Instagram or YouTube, on Instagram you'll see off here. I just have a couple charts up: SPY, Qs, DIA, Nvidia, AMD, so on and so forth. If you want to see my charts a little bit up close, then YouTube is going to be the area. So these are going to be recorded going forward. So if I say anything and maybe I said something that sparked your interest, then you guys can watch the videos now on YouTube. Cool. All right. So let's begin here. Let's talk about FOMC, and let's talk about some target areas on SPY. So I thought FOMC, I thought that there was a disconnect there. I mentioned this yesterday on my video for the afternoon, on my breakdown, on my recap. I actually said that be careful on chasing longs. I said be very, very careful with buying dips, and just being negligent with taking long positions. I did take a position yesterday on Amazon. Amazon is the only thing in my consciousness where I feel comfortable in saying, okay, we can buy a little bit into this. But let's focus right now on the Qs. Right here, I have a consolidating box. It's between $472 all the way up to $487. I'm thinking if we break up above 487, good morning, just in case you guys are joining here. If we break up above 487, I think that we have a new area to trade back into. That's going to target all the way up to $500. Okay, so that is my bullish interpretation. My bearish interpretation is we trade back down to approximately $467. So we retest these lows that we put in just a couple days ago. Okay, so I didn't really see a very large volume print yesterday. I really didn't get any sense of that. I'm gonna bring you guys into the daily time frame. Maybe you guys can see it here. So on the daily, there was some volume that came in towards the end of the day. We finished at about 56 million shares that were swapped. I'm not seeing the institutional buying. I'm not seeing a large inflow of orders. So what you guys are seeing right here is tradie ticks. Whether you use tradie ticks or not, there is no such thing as a order flow platform that is 100% reliable. I just wanted to make that a point. I had a very good conversation with a trader that's part of the group, just talking about the reliability of the data that we actually get. Data is expensive. The Bloomberg terminal is expensive. It's $24,000 a year. When I started trading, it was a lot more than that. So how reliable is the information here? It's more reliable than 50%, but it's not going to be 100% infallible, of course. But all in all, I saw a lot of shorts come in on SPX towards the end of day. So I want to break this down. I know we're talking about Qs, but let's just go over SPX real quick. $332 million worth of short positions on SPX. That is a considerable amount. It really, really is a considerable amount. There's some long orders coming in on Tesla. There's some long orders that came in on Amazon. I'm going to talk about Amazon here in just a second. Okay, I'm going to explain to you guys why I think that Amazon might be worth consideration. Let's look at dark pool data real quick. So just in case you don't know what dark pool data is, maybe you're a newer trader, more experienced traders, just bear with me just a second. Dark pool data are orders that are to be concealed. When institutions take orders, they're not putting in a huge footprint, right? They're not buying $15 billion worth of any sort of position all at once because they reveal their position, they reveal their intention. So they're going to do it sometimes in block orders, and they're going to segment it. So they'll buy into SPY, for example, at 560 and then 561.50, so on and so forth. They want to do so incrementally because they don't want to reveal all their cards. It's all strategy. It's not just us retail traders, but it's institutional traders as well. So here, I take this with a grain of salt. So I'm looking at certain positions coming in or not coming in. I'm seeing whether there is a good influx of large orders that are either short or long. I want to look at the set nectar amount, or excuse me, sector net amount. I don't know. I'm not dyslexic, so I don't know why I made that mistake. So there was a net amount coming into financials. It looks like utilities. And we really don't see all that much there with technology, right? The technology sector is what we're looking for inflows on. I didn't really see too much of that yesterday, at least not in any significant capacity. So I'm looking at the orders. I'm looking at Goldman Sachs, which is interesting. I'm looking at Meta. I can talk about Meta today because I am interested in taking a position on a leverage shares for Meta. For you guys that are in our Discord, I haven't talked about Meta at any large capacity because I've been focusing on Google and Amazon. You know, if you guys follow me pretty regularly, I've been talking about those very consistently, extremely consistently. So I'll talk about Meta today on today's session, and then later this afternoon, I'll make a video speaking to why I would even be interested in Meta. But all in all, I don't really see a lot of prints on the indexes. So let's go back here to Qs, right? I don't see it. I see right now, if you guys are pattern recognition traders, I'm really seeing a bear flag. Okay, I'm seeing, yeah, we oscillated back down to 470 after this dramatic drop, right? This drop shook the world, literally. So I don't necessarily see the strength that I would need in order for me to take on long positions. So for Qs, I reiterate, just in case you jump back onto the session right now, I'm looking for a break above $484. And then if I see some continuation, maybe 490 would be my target. Okay, so 490 is going to bring us approximately right there. That's a Fibonacci sequence. So let me give you more concrete levels. I took a long position yesterday at close. I did get stopped out. My long was right here, and then I got stopped out at like 4 o'clock in the morning. Thank God I used stop losses because yeah, this would have been a significant loss if I wasn't using a stop loss. So what do we have right now on the Qs? Qs has a support area exactly where we are. I'm looking to scalp today. I really am. So, but let me give you the higher context first. I'm thinking back down to 476 is an area of interest. And then all the way back down to 475 would also be an area of interest just because this is a snow line. 2 days ago, I tried long positions here because I knew that there was going to be a bounce. I absolutely knew it. I just didn't catch it. So we had that bounce all the way up to the fire line. So the fire line basically is either support or resistance, depending on how price action is going to react to it. And we rejected it. We rejected the fire line here, and we rejected pretty close to the fire line. We were off by like $2. So what is the support area if we cannot hold support between 472 up to about 475? In my opinion, that takes us down to approximately 470. The lows, if we take out the lows, we're in trouble. We really are. In terms of price action, depending on where you are, I'm looking for us to swing back down to the 470 area, and I can do something with that. I really can. So those are my levels for right now. Now let's talk about SPY. I'm not going to spend too much time on it because it's the same analysis. It's the same pattern. It's the same thing going on. Two areas that I would like to point out. First of all, if we swing for the highs, it's going to be 570. Do we have a higher low and do we have an inverse head and shoulders pattern? Yeah, we do. We do. If that is wonky terminology, it's just a pattern recognition that us traders, we have statistic data behind on whether or not they work. So a head and shoulders pattern or inverse head and shoulders pattern has a tendency to work, especially when markets are trending or you're looking at the higher time frames. It doesn't really work too well on the shorter time frames, but on the higher time frames, anywhere between 60 to almost 78%, right? So there's a huge gap there. It really depends. Is it always going to work? No, of course it's not always going to work. There's so many other different extenuating factors that we need to consider. So for right now, I'm looking at 560 and I have an alert back down to 555. If we cannot hold 555, which is right where the fire line is, then I'm thinking we trade back down to the 550 area. I would like to buy into SPY and QQQ, as I've mentioned 100,000 times. I talk about the same stocks over and over, but I need the right risk reward. Okay, so my risk reward calculator, I'm going to share with you guys. Y'all should be using your risk reward calculator. If you get anything from our videos or our presentations, start using a risk reward calculator. Please start doing that. It will absolutely transform your trading. Okay, so let's go to our risk reward calculator. Let's just see exactly where we can trade back down into. I'm a little bit more comfortable in Trend Spider. I've been using it longer. So let's dive into SPY and let's see exactly what the risk reward can be on any given position. Let's do that. And then let's blow that up. Let's go to the 4 hour. Cool. So let's just say I take a long position here. What would be my risk reward if I were to do that on this time frame? I would have to set my stop loss at a reasonable, this is SDY, my bad. I would have to set it at a reasonable injunction level. That would be about 560. I think that would be fair. Because I don't want to hold it all the way back down here because now I'm dealing with a drawdown. So I'm thinking risk reward would be at least that, right? If we can retrace back up, maybe about 50%, my risk reward would be almost 5 to 1. That's not bad. That's really, really not bad. I'm not going to be buying SPY. I've said this already 100,000 times. So SPY and QQQ, I'm going to buy the leverage shares positions on these. Cool. If I wait for a little bit lower, then my risk reward starts to become more attractive. Let's just see what that number is. So instead of a 5 to 1, which is already phenomenal, it really, really is phenomenal. Then now I'm looking at very close to almost an 8 to 9 to 1. So I would prefer to wait if we start trading lower for that possibility. I'm not saying we're going to trade lower. That would be ridiculous for me to say. No one knows what's going to happen. I don't know. You don't know. No one knows, right? I hate people that say this is definitely going to happen, and they basically give you an ultimatum. That's not what trading is about. Trading is about thinking about improbabilities, and that's what I'm doing here. So I'm going to explain why I took Amazon in just a bit. If we do trade back down into this pocket, specifically the swing lows that we had on SPY, I like it for a long, okay? I really, really like it for a long. And the same thing is going to be for the Qs, right? SPY, Qs, let me look at my futures real quick. Let me just see where we are on that. You guys you're just looking at my broker here, so no worries. I abstracted the account information, so we're all good. Don't worry about that. We're still 0.5% down on Qs overall. If I'm looking on the 10-minute time frame, that pullback was pretty dramatic, right? It was really, really dramatic. So if we fill that gap back down here, I'm already watching it. Anything lower on SPY, about 555, I'm looking for the risk reward now to be to the upside. Cool. Okay, I want to bring up IWM as well. Let me see how much time I have. It looks like I have some time. Everyone is doing okay? You guys are following along? If you're following along, either on YouTube or Instagram, just let me know in the comment section. Yes, H, I got it. I understand what you're saying, and yes, this does make sense. And if it doesn't make sense, I'm going to look at the comments here. Just let me know. Let me know if I'm not explaining something, and if it just doesn't make sense. Cool. Remember, I'm not a biased trader. I have no bias. I only think in probabilities. I only think if I do trigger a trade, either I'm going to be stopped out for a very small loss, I'm going to take a break even, or I'm going to ride a little bit of the trend. But I consider, is the risk reward to the upside or to the downside? Very different than trading with a bias. Most people, 98% of people, will trade with a bias. I don't do that. I really, really don't do that. I want to make sure that if I'm going to take a risk, especially some of the risks that I want to take now that I've taken on Amazon, I'm looking at the risk reward and thinking just a little bit more so in the future. Cool? All right. So yeah, we're down. Looks like we're down still 0.5%. We really haven't engaged any price action to the upside. So what do we have right now on IWM? Same thing. We had a head fake, right? So we were crossing on our fast moving averages. If you're using the 9, the 13, and the 21, stick with that. Don't change those moving averages. I'm doing something a little bit different. So if you're seeing that on my chart, it's okay. But just recognize that I'm telling you, if you don't know the statistics behind the stack that I'm using, then by all means stick with your stack. So we had a head fake above this area, above 204. It looks like we targeted 207. We pulled back, and right now I'm looking for us to hold at least 202, but at least trade back down to, in my opinion, 197. I brought this up. I'm going to bring it up again. I'm laser focused, literally laser focused on TNA. On TNA for your weekly time frame, the risk reward is just unbelievable. It really is very good. Okay, it's 40, 50%. Some of you guys are going to say, you know, Sage, I'm really not that interested in 40, 50%, right? I'm really not that interested. That's okay. That's okay. If you're looking for trades where you're going to make 100, 200, 300% gain, You can try your leaps on your calls. That's perfectly fine. There's very good risk reward when it comes to that. I would urge you to consider how much of your portfolio you're looking to use on the position. So be careful. For me, for a guy like me, I have a happy medium. There's no trading system. There's no trading system that exists that is going to be perfect for every market condition. It doesn't exist. If you understand systems, if you understand engineering, if you understand architecture for any sort of strategy, then you understand that. You understand that incredibly well. It's not about what system is going to get me the most amount of money for right now, because there's trade-offs. So my trade-off is, instead of doing, $10,000 or $100,000 worth of calls on SPY, 7-8 months out, I prefer not to do that. I prefer to have somewhat of a happy medium. I'm not happy with the 10% gain. I'm not interested in that. But I am interested in between 50 to maybe 70% gain on a good part of our portfolio. That's why I'm discussing TNA, because I'm not going for 150% gain, but maybe 50, 70%. Yeah, that sounds pretty good to me. So what is the perceived value that we have on TNA so far? Are we going to be hitting all-time highs on TNA? First of all, you need to know what all-time highs are. So TNA is all the way up at $113. This is going to be semi-equivalent to IWM. Is it exact? No, of course it's not exact. But risk reward here does make sense. It really, really does make sense. So let's calculate that, right? Let's talk about the actual calculation and compute it. If I were to take a trade here and I set a stop loss back down to like 29.50, if this were to start to move in my favor, that is approximately a 4-to-1 risk reward gain, right? It's very good. It's very good. If I were to hold it a little bit longer term, then let's just say I get up to approximately, let's call it $50, right? And I don't get stopped out here. The risk reward now is 6-to-1. If you recognize probabilities and if you understand sort of the language that I'm using with you guys, you know that this is a very good risk reward trade, right? For those of you guys that are, I don't like using the word scared because I think that it's a little bit of a trigger word for us traders. But for those of you that are saying that the market is bad or the market right now is not favorable, stop thinking like that, because the market is the best, literally the best, when it starts to sell off. In all honesty, I'll share with you guys, it's not really that big of a secret. I'm very happy of the fact that now, even though I cut my positions, I'm down a lot of money so far for 2025. I'm down a lot. But these opportunities, when we pull back 10, 15, sometimes 20% in the market, they are literally the best times to buy in. There is no better time than when we're pulling back between 10 to 15%, especially on the indexes. Does it take time to recover? Am I going to be the person that tells you, hey, we're going to recover in 6 months, 23 days, and 7 hours? No, I'm not going to be that person. No one's going to be that person. But it would be ridiculous for me not to engage and say that now is such a good opportunity to either add to our long-term port, your 401k, your IRA, Roth, whatever, your retirement account. These pullbacks are fantastic for you to add into because the risk is less, right? If you don't understand that relationship, you got to do a little bit of studying. You cannot buy when you are 3-4% away from all-time highs. Those are generally not the best times to buy. The best times to buy are between 10 to 15% pullbacks anytime you get them on the indexes. TNA is such opportunity. So how low can we actually go on TNA? Some of you are asking that, and those are the right questions. So by what we can see on technical analysis, if we were to pull back, we have a pullback of roughly about $7. So what does that mean in terms of percentages? We have a 20% pullback for a perceived 60% gain. Would I hold all the way back down to 25? No, more than likely I would not. I would set my stop loss at approximately $30, maybe $30.50. And then I would regroup and then take the position lower. I'll take whatever. I'll take the 5% loss or whatever the percent loss is, and then I will jump back in as soon as market conditions start to become a little bit more favorable. Cool? All right, so that's TNA. If you read between the lines, I'm not talking about just TNA. I'm talking about strategy. I'm talking about how to think about trading. So take what I said, right, with your experience and, how you think about trading, and then apply that to some of the stocks that you guys want to buy into. If you're not talking constantly about buying into shares or buying into a good, reputable company right now, you're wasting your time, because now is the time to be doing that. Talking about buying stocks at all-time highs, that's no good. That's no good at all, because your risk reward is all wonky. Cool. All right. So now let's talk about Amazon. Amazon is a trade that I've taken recently. So some of you are going to say, hey, Sage, we got a gap all the way back down to 150. I don't disagree with you at all. I don't disagree with you at all. What do I always say? If you join my sessions, I always say, consider the risks, know where your stop loss needs to be. And from there, if you start trading lower, then take the loss. Take the loss, take the 5% loss, the 10% loss, and then you regroup at a lower increment. So what am I going to say here on the daily time frame on Amazon? You have a demand level between 185 all the way up to 190. Am I in an Amazon position right now? I am. I'm going to tell you flat out. I'm in a huge Amazon position. But am I going to hold it for a drawdown until we get back down to 170? No, more than likely not. I have my stop loss in place. I'm willing to risk 3, maybe 4% on my position, which for me is going to be a lot of money. Okay. My stop loss on this is going to be a good amount of your guys' portfolio. It's a big position. It really is a very big position. But I'm willing to take the risk from here, although we don't have clear-cut signs. I thought I saw it on the 4-hour yesterday, but doesn't look like it's going to be panning out. So if we do make another leg lower, my stop loss, I believe, is at a 3, maybe 4% loss. I'll take it off. No problem. So what am I looking at going forward? Why am I bringing up Amazon? Amazon should be top 3 stocks that you are interested in buying into. Sage, but the risk reward of the gain, it sucks. It's terrible. How much am I looking to make here? I'm looking to make 20%. I'm not really that interested. I can make 20% buying calls on 0 DTE and I'm done. Cool. That's okay, right? There's nothing wrong with thinking that way. I'm thinking more of my portfolio. I'm not thinking just one contract. I'm thinking a massive amount of capital allocation for myself. So as stated, right, I don't hide this from anyone. I like taking leverage shares. So my leverage shares of choice, my poison of choice is going to be AMZU, right? I'm not going to hold on to this forever, but so far right now, as far as I can see, doing technical analysis, there is a perceived 20% drawdown. I'm probably going to cut this. I think I set my stop loss yesterday at 30.50. It's somewhere along that line. So if I trade down another $1.30 here, I'm out. I'm out. I don't want to be holding on for too much of a drawdown. I already made that mistake. I made that mistake on AMD. I don't feel like repeating myself. So if we start trading back down incrementally to $28 and then possibly 25 is an aggressive target. 26.50. I like it. I like it so much, guys. I really, really think that y'all should be spending the time and considering some of my comments here. I know some of you are like, I'm not interested in 40%. You should be. You really, really should be, right? 40, 50, 60% on your shares position if you're taking a good amount of your portfolio. I'm not going to say I don't want to give, any egregious ideas. I don't want you guys to full port on something and then, call me up and say, "Hey, this guy on the internet told me." I don't want to do that. I'm just giving you trading ideas. Or in this very specific circumstance, I'm telling you, hey, maybe Amazon is not the worst idea for you to buy into. So let's go back here to the Amazon chart, AMZN. If we're thinking about incrementally trading lower, my pocket is 170. What am I going to do at 170? Yeah, it's not that hard to, connect the dots. At 170, I think I'm going to take the lion's shares of those shares, right? I'm going to be an institutional trader when it comes to the 170 area. So God willing, if we get to that level, then we get to that level. Cool. So that's Amazon. Last thing that I want to talk about, I still think I have about 7 minutes. I want to give you guys space in order for you to ask your questions. I know everyone is interested in Tesla. I did take a small Tesla gain yesterday. I took a large position. If you're in the Discord, you know how much money I made. Off of the daily time frame, I've called out 220, but I'm thinking, as an incremental level lower, I'm thinking anywhere between $190 to $200. I'm out of my Tesla position. I'm done. I'm out. So it hit my stop loss, and right now I'm not interested in trading it until off the 10-minute time frame, we get back down to at least 225 or 220. So if we do get a pullback, I'll get back into Tesla. I'll do it. No problem. It hit my stop loss. I made some gain. I got in. I'll tell you what trade I took. I'll tell you exactly what trade I took. Excuse me. I woke up. My sinuses are a little bit stuffed. I spent all night studying. All night until I got my alert 4 o'clock in the morning that I got stopped out on my lawn. All good. So I took TSLL. I took it at $7.55, and I rode that up to, I think I took it to like $8.10. So as soon as it hit my stop loss, I'm done. I'm done. That's what I'm going to be doing on my larger shares position. There's no reason to hold on to it if no longer it's going in your favor, right? So if we do trade a little bit lower on Tesla, I want to give you guys those levels on the actual big boy here. If we do trade back down to, $190, $200, or if I'm seeing on the 10-minute, 15-minute time frame, if I'm holding some of these lows, right, 223, 220, I'll take it again. No problem. I just want to make sure that that risk reward is in my favor. Cool. So just to recap as to some of the things I discussed, we did talk about QQQ. We did talk about SPY. We also did talk about IWM. I didn't necessarily give you a bias because I don't have one. I'm giving you target areas because you should be trading more so how a software engineer thinks. If it hits a specific condition or if it hits a particular level, you take a particular action. And from that action, you deploy all your mechanics, your risk reward, how much you're going to take, what kind of trade are you thinking about, what is your time horizon. These are all decisions that you guys need to come to. And of course, you use our opinions as discretionary content on whether or not you pull the trigger on the trade. So I'm telling you, these are some of the things that I'm looking for in order for me to take a position going forward. Cool. So we went over QQQ, we went over SPY, we went over IWM, we talked about Amazon, and also we talked about Tesla. I'm going to leave the floor open for you guys. If you have any questions for me, feel free to ask them, okay? So I have another 5 minutes. I always like to ask for feedback. So if you guys felt like today was worth your time, let me know in the comment section. You're going to let me know with either a thumbs up, or if you didn't think so, give me a thumbs down. That's okay too. That's perfectly fine to give me a thumbs down. So let me know in the comment section, and I'm going to read your guys' comments here. I'm going to see exactly what you guys are looking to trade. Let's see what we got. Wow, there's a lot of you here on today. How much do you think the stock market will be at the end of the year? I have no idea. That is not the right question to ask someone like me because I have absolutely no clue. I'm not trying to forecast. I'm just trying to play risk reward. So forecasting, you have people a lot smarter than me, and they're constantly doing analysis on things. But I don't like to play that game. The game that I like to play is playing within a range and then understanding the probabilities of getting from point A to point B, but not necessarily after the all-time high mark because there's no historical data for you to attach yourself to. So for now, this is the most interesting part of trading for me because I can define the ranges because we are in ranges. We definitely are. So I'm not the best person to ask about forecasting of where we're going to be hitting at the end of the year. Go down. I think I can give you a better opinion about how far we can go down. I think that I'm a little bit better at that. 450 is where I'm seeing a possible area for institutions starting to buy. I don't see institutions buying. I don't see a huge influx of volume throughout the day. We traded 50 million shares yesterday on SPY. We traded 38, or not even that, like 35 million shares on QQQ. That's not institutional buying. It's not even close, right? Not even close. So when I start seeing that, I'll be a little bit more optimistic. Right now, I'm not that optimistic. But as far as I can tell, the golden shelf on the fibs for QQQ is 460. So between 450 to 460 is where I am guessing. It is totally a guess of where we can see some support. That's going to be best case scenario there. And then for IWM, I'm foaming at the mouth. I've said this already on a few sessions. I would kill to get into IWM either around 190 or I'm seeing a shelf at approximately 185. That risk reward is going to be chef's kiss. It's going to be unbelievable at those levels. It's not just about those levels. You have to pay attention to market internals and what's going on, right? You can't just take it off of a level. Trading is so much more than the one dimension of you doing technical analysis. Technical analysis is 50% of trading. You have to pay attention to market internals and market conditions. However, that being said, these are the best times for you to consider to actually take substantial positions. I feel comfortable saying that because I'm going to be doing that very soon, very, very soon. What else y'all got? What else do you guys have? What signs do you look for a reversal if SPY starts to to trade a little bit lower, I look for capitulation and I also look for institutional buying. When I start noticing institutional buying, then I know that I need to start. Institutional buying is all about volume, and all about concealed orders either on the dark pool chain or on the option flow chain. I'll notice them because they're humongous orders. They're huge. They're billions of dollars that are being poured into the stock market. Those things you need third-party software for. You're not going to see it on TradingView or TrendSpider. So a couple of ones that I'll recommend. If you go to Bloomberg, if you pay the subscription, generally they're going to tell you by articles. They're not going to give you actual market data, but they will tell you articles of what institutions have a little bit more of a sentiment or a bias going forward. Also, you can use something like AlgoFlow or you can use TradyTix, which is a happy medium. Is it 100% reliable? No, nothing is 100% reliable. So I would say stack your sources, right? If you're taking information just from one source, you're not going to do okay with trading. You need to, and I'm saying this as someone, I'm just one trader. Listen to other people. Make sure that you are layering in your information so you can formulate a more crystallized opinion. Cool? That's my recommendation there. Let's see what else we got, guys. Someone is asking me about Hood. I'm going to gladly go over Hood. Hood would not be my weapon of choice. I'm sorry, I'm congested. I feel so bad that I probably sound very nerdy, or just I don't sound like myself, basically. Okay, so on Hood, off of the daily time frame, right now we hit the low of the fib sequence. This is a good area for you to attempt your long position. I would wait for a retest back down to 37. Okay, so between $33 to $37, I would consider, hey, now I'm looking at good risk reward. You have a gap to fill back down to approximately 27. I would not consider $22 is too low. You want to consider this area right here. Why? Because whoever got in around $25 to $27, their stop losses are going to be set just a little bit lower than this. So if you have a cascading effect back down to $28, consider what I said, right? Stop thinking in terms of opinions. Opinions don't mean anything in the stock market. There's no stop using opinions as like the way for you to formulate your decisions. Formulate your decisions mathematically. So mathematically speaking, if we got back down here and then we start seeing some sort of pendulum or the crypto market starting to recover, then by all means, you can look for your long position. Is that an aggressive target to the downside? Yeah, it is. Absolutely it is. But you have to understand where I'm coming from. I want the best price possible, the absolute best price possible. So if you retrace back down to $35, $34, that's your fib sequence, right? You're going to maybe sweep out some of the stop losses here. We don't know. But I would wait between $33 to approximately $36, I think is reasonable. Between 33 to 36, this is where I would wait for support to hold, right, for 2 touches, and then look to take a long position from there. If you're asking me about a short position, I'm not shorting anything right now. I am not shorting, not one. I have no interest at all in shorting anything in the stock market. For me, I'm waiting. I'm waiting for everything, literally everything for me to buy into. Cool? All right, let's see what else we got, guys. I got another 2 minutes here. Okay. Oh, so I just answered Dominic's question. So am I shorting anything? No, I'm not shorting anything. I'm just looking to buy into things. I think shorting right now, it's perfectly reasonable to do so, but I want to focus on the marlin right now. I know that shorting is exciting because you can make money extremely quickly. I'm shorting with futures. I mean, that I'm going to do all day long. But in terms of like shorting the market for another 30 days out, and calling catastrophe, I prefer not to do that. I prefer to focus my energy where I always do. I've been doing this for 12, 14 years. I rather focus my energy on getting a very good price into things that will appreciate. That's where I'm at right now. That's my psychology and that's my trading style. If that doesn't fit you, that's okay. That's okay. I recognize that I know myself extremely well. So in these conditions, I generally make a back. This is how I built my wealth over time. Looking for opportunities like this. It sucks when the market is selling off for sure, but I always have ammunition in the chamber to make sure that I prepare for moments like this. This is what I've been doing with my guys. If you're my guy and if you're on this call, if you're on YouTube, or if you're on Instagram, I've been extremely consistent when it comes to this. Extremely, right? I'm telling you, wait for the opportunities so we can buy in. We've already done that on Amazon. We're looking to do that in a couple of other specific pockets here very shortly. Let's see what we got, guys. Cool. Coin. Actually, I'll go over coin because I really want to give you guys some opinions here. I've been interested in coin for a hot minute, like literally a hot minute. So my target on coin was 190, and it sucks for me to tell you this, but now my coin, my revision is lowered back down to 160. Okay, I'm not interested so much in crypto. I will tell you what it is that I'm interested for in crypto. It's going to be ETH. I've said this for a couple of weeks now. So ETH is going to be the only thing that I'm interested in getting. I know you're asking me about Coinbase, but as far as risk reward, is it good on Coinbase for the upside? Yeah, absolutely it is. But I'm still thinking a little bit more Ethereum. If Ethereum can trade back down to 1600, I might have a play. So now going back to coin, if I have a bearish opinion on cryptos still, this is the area that I would recommend that you watch. You might say, okay, you dummy, we're not going to be trading back down into that area. So you're giving me, bad information. I don't think that I am. Look at it from where I'm standing or where I'm sitting. Think about that risk reward always. I'm always going to bring that up because that's the only thing that matters in trading. The only thing that matters is just risk reward. So think about if you got back in here, you can tolerate a stop loss at 155, but just look at all that upside, right? All that upside is just phenomenal. What's your risk reward? It's like 10 to 1, dude. So if you trade back lower, your other target area right here around 120, and don't be that person that says, nope, we're not trading down to 120, right? That screwed over the Tesla bulls, right? Saying that we're not going to be breaking below 350. So be careful. Wait out the market. Wait out. If you're a crypto person, I would urge you to please consider where your stop losses are and consider if I'm going to take this loss, this 10% loss, I can wait out the market. Stop trying to catch every little trade that's out there. Focus on where you can actually make money and try not to spread yourself too thin because we only have a certain finite amount of energy. You cannot try to catch 50 different trades in a month. Just focus on 2 or 3. This is how fortunes are made. This is how I made my quote unquote fortune. For years, man, I would just wait on a specific trade. I'm just going to wait on something. I waited for a certain trade. I'm still waiting on South Korea. And then I waited on China for the longest time. And it's benefited me. So I'm waiting. And I would recommend for you to wait here on coin as well. I know that that's probably more information than what you were asking for, but that would be my recommendation. Wait for either the 160 pocket or back down to 120. Then I'm going to be all over coin. I'm going to be all over it if we get back down to those levels. All over it like white on rice. Y'all have no idea. Do you consider any factors aside from technicals? Yes, of course I do. Of course. I'm considering the market is forward-looking by anywhere between 6 to 12 months. This is something that I know. I don't abstract myself from market conditions and market sentiment. I'm always using forward-looking guidance on earnings expectations. That's a huge deal. But I'm paying attention to institutions, right? I'm reading articles. I'm constantly reading articles all day long. Like when I'm in the Discord, when it's fairly quiet, I'm reading articles because I want to know whose opinion matters, right? Because my opinion sure doesn't matter. But the people that actually move the market, the institutional buyers, or the people that are heavy-handed, the people that actually put on the $15 billion trades, I want to pay attention to what it is that they're buying, what it is that they're saying on Twitter, and what it is that what their outlook is. So technicals, all this right here, I pay $300-$400 for all this information a month. Yeah. Is it important? Of course it's important, but you also need to use your common sense. If the institutions are saying we're not buying, then you probably want to wait a little bit. You want to cool your brakes. If you're a little bit older and you pay taxes 4 times a year like I do, you understand what I'm talking about. There's no rush. Are you going to get the best price with the market drawdown that you have now? No, you're not going to get the best price, but you're going to get a good enough price where it's going to matter down the road, 6-8 months. So when the institutions start buying, they're not looking to catch a V-shaped recovery. That's not going to happen. That's definitely not going to happen. But what will happen is they're putting in their money, like we should as well. We should think like this, putting in their money and looking for an outlook 6 to 8 months. We're not going to start jumping off of the first interest rate cut. That's not going to happen. It's going to happen 3-4 months before that because the market is forward looking. So that is just a very, very short answer. 1% of all it is are the considerations that I have for, I'm going to make the decision. I'm going to try to pretext what's going on in the future, but I got to see the institutional buying first. So is that a technical component? For sure, it's a technical component. But I'm paying attention to also what the big players are thinking about and what they're saying going forward. Cool. So I really hope that I answered your question. I have a tendency of talking a lot. You guys know that. Are there any new trading strategies that you've seen others adapt, something to study for the rest of 2025? Yes, actually I have. I've been trading algos. I've been doing algorithmic trading. I built my own algorithm and I've been using it on the futures. So is there any new sort of development? There's a lot more liquidity in the market. So back when I was trading wasn't the most difficult thing. It wasn't like popping, right? It wasn't only fans of the day, right? Maybe that's not the best analogy, but trading has become this huge gamut of it really feels like casinos when they were coming up in the 40s and then in the 50s here in the United States. So it seems so much more gamified now than it was back in the day. So that being said, in terms of taking triggers or taking positions quicker, now I'm using algos in my own trading. So I built my own bot, right? I've done my own back testing. You guys see some of the tabs that I have up here. I have my own. I'm doing my back testing using Quant Connect, right? This is just one of the things that I'm using. I use a lot of back testing. So when I take a trade, I can do so quicker. And I don't have to worry so much about, I didn't take this position because I was a little too slow, because I'm slow. I'm a slow trader. But when it comes to if the signal is fired and if there's 2 time frames that are confirming something, I have 8 conditions that I use in order for me to fire the trigger. And then all the stuff that I talk to you guys about, risk reward, taking positions. I took a position long, I'll share with you guys. I took a position long on NQ last night. And then 4 o'clock in the morning, I got an alert where it cut the position. I made $850 on the trade. So am I happy with $850? I mean, not really. I would have liked to make $4,000, right? I would have loved to make $4,000. So I took a signal off of the 5-minute time frame here. So I took that signal. I literally took that signal. And then 4 o'clock or whatever it was, whatever time frame it was, it triggered. And then I'm looking at my phone, I'm up $850, but thank God the stop loss was there because I understand trading inside and out, right? So that bot or that algorithm that I built, it's trading the way that I think. So I would highly encourage you guys, if you have a trading strategy that you can back test and that you understand inside and out, you can build your own trading algorithm for like $2,000 to $5,000, right? Back in the day, when I wanted to do this for the first time, guy told me it's $150,000. At that time, I didn't have that money. I definitely didn't have that money. So I would recommend that if you have a strategy that you understand inside and out, that is how I am adapting to market conditions. So hopefully I was able to answer your question. Cool. What else we got, guys? Yeah, I do use fib retracements. Yes, absolutely. I use fib retracements where I'm swinging the point of interest, or at least where the move has started. So for example, I'll tell you, if I'm using a fib retracement here on the swing low for QQQ, I'm absolutely using that retracement for sure. It's part of my strategy. Absolutely. Okay, guys, I have to call it quits. Today I went over. Thank you so much for hanging out with me. This video will be uploaded on YouTube just in case you want to reference it. All the videos that we're going to do going forward, we're going to be uploaded on YouTube, and I'm going to be on there every single day. Okay, I'm going to be giving you recaps of what's been going on, the trades that I've taken, why that I've taken them, so you guys can be a little bit more informed on, how someone that actually trades every day, what they're doing. Cool. All right. Thank you guys so much. I'll see you guys for the next session.